Good morning, everybody. Thanks and welcome to the Shareholder Equity Conference. I'm Oliver Chen, Cowen's Retail, New Platforms, and Luxury Analyst. I have the privilege to be joined by Revolve's VP of IR, Erik Randerson. Cowen and Company rates Revolve as outperform. We continue to love the stock on experiential and marketing leadership, as well as next generation fashion and luxury goods. Revolve stock is fairly expensive given a PE above 60 times, but growth prospects are also exceptional given our view of a long-term growth rate profile of above 20%. Erik has served as VP Investor Relations for Revolve since September 2019, joining shortly after the company's IPO. His role includes IR, Board of Director Communications, ESG, and Competitive Intelligence. He's also a CFA charter holder and was recently named to the Institutional Investor All-America Executive Team, where he was recognized as a top investor relations professional based on voting from the investment community. Erik, congratulations on that. Thanks for joining us. Viewers, please remember to use the chat feature at the bottom of the page to submit questions. Erik, I'll turn it to you as you have a prepared presentation.
Thank you, Oliver, and thank you all of you for listening today. I'm really excited to talk to you about Revolve. It's a really exciting time in our business, and with that, we'll get into it. I think you're all probably familiar with the forward-looking statement, so we'll move on, and you can read that at your leisure. And what is Revolve? And at a really high level, we believe we're the leading fashion destination for the next generation consumer. And just to kind of level set, we don't sell anything in stores. It's all online and has been since we were founded in 2003. And really kind of a fun fact is we were founded by two co-CEOs who are still very active in the business today who had no fashion experience whatsoever. And you might say, well, that's interesting, but it's really proven to be a great advantage because we've taken a data-driven approach uniquely to everything that we do, including the merchandising, that has allowed us to generate very strong financial results. And so if there's four key differentiators I want you to walk away from before we get into it. One is that we have a proprietary technology platform that allows us to use a data-driven merchandising model to read and react to data signals we're seeing in near real time. That's been a real key differentiator, and that proprietary technology is used throughout the company, and I'll speak much more about that. We also have a very disruptive brand marketing platform that does a great job connecting with this next generation consumer. Anybody who follows us on social media knows what I'm talking about. We've got also a unique owned brand platform. And what I mean by that is we have internal design teams that develop our own styles that we then outsource the manufacturing of these own brands. And so that gives us a differentiated assortment for much of our styles that we hold on the Revolve site, and also enhances our profit margin. And as a financial guy, most exciting to me is that we have a very strong track record of financial performance. And I'll speak much more about that as we get into it. I think what's also exciting is that Revolve sits in between the intersection of a couple of really powerful shifts, right? And so Oliver has written a lot in his research about the next generation consumers, specifically the Gen Z and millennial consumers. And you're seeing that group increase in size, and you can see that 11 points in the last kind of 5 years in terms of the percentage of the population, and also increase in purchasing power. And so Revolve is very well positioned serving that Generation Z and millennial consumer. Equally important, we're also very well positioned as somebody who is digital first, introduced in 2003 as only online. We're really well positioned for the growth in e-commerce. And we all know how well that has accelerated since COVID hit last year. And there's still a lot of room ahead of us. And so as much as it's come very strongly, there's still most of the sales are still happening in physical retail. So Revolve very well positioned for these two very, very exciting trends. Let me now step back and talk about our two destinations, our two brands that we serve consumers through. The Revolve site, or the Revolve segment, is the largest at about 85% of revenue through the first 9 months of the year, primarily serving millennial and Gen Z females, about 5 million Instagram followers. And it's very premium. There's a lot of differentiation in our assortment, and it results in an average order value of over $200. So we see a lot of white space around that competitive mode in that realm. Not a lot of folks that are doing what we're doing, and we're connecting with that consumer who's looking for premium on-trend merchandise. And what's really interesting too is that the assortment is mostly emerging brands, smaller brands that are not household names, and our owned brands. And so what that means is that there's very little overlap between what we have on the Revolve side and other retailers. And that's been really supportive of our ability to sell merchandise at full price and also to generate very attractive gross margins. Revolve has historically been known for going out, and so we've over-indexed in dresses and skirts, and that's very different from the forward segment, which I'll talk about next. So forward is really in our luxury segment, focusing on a little bit of an older, more affluent consumer, and the average order value in forward is closer to $600, so more than twice what we see on Revolve. And in terms of the assortment, it's a lot of well-known luxury brands, like you can see at the bottom of the page here, Givenchy, Balenciaga, Bottega Veneta, and it's really also over-indexed in handbag and shoes. And so that's important because these are highly complementary segments. So at Revolve, our customers coming to us for dresses, and looking forward, she's buying us the statement pieces like handbags and shoes. And so there's a really great cross-selling opportunity that I'll speak to in a few slides. It's also been a key driver of the strength we've seen in forward in recent quarters. So let's now step back and look at recent performance just at a really high level. And so, no doubt 2020 was a tough period for retail in many respects, and certainly for Revolve as well. It's gratifying to see the business come back as strongly as it has. And so I'll start on the left-hand side of the page. I'm showing you here our net sales growth versus comparable 2019 quarters. And as Oliver will attest, like nobody's looking at comparisons versus 2020 in the industry, because it's been such a challenging comparison. 2020 was a tough year for many companies. And so the way to look at it is versus 2019. And on that basis, it's great to see that our growth has accelerated. So in Q1 of 2021, we delivered 30% growth versus 2019, pre-COVID. And that grew to 41% in the second quarter and all the way to 58% in the third quarter. So really outstanding. And as I kind of point out at the bottom here, the forward segment, our luxury segment, has been a call out with over 100% growth year to date in the first 9 months. And just kind of put that in context, we're doing exceptionally well. Some of the more premium department stores, not to pick on them, are sort of holding it flat versus 2019, maybe a little bit down or maybe a little bit up, and we're growing at 58%. So really, really executing well. And that is part of that growth that I think Oliver was speaking to in his prepared remarks. Another really exciting thing for me is to look at what's underlying that performance, right? What are the core operational metrics? And one that we focus on very much is active customers. And we're seeing signs of increased consumer engagement, and that active customer growth, what I'm showing on the right-hand side, was the highest it's ever been in the third quarter, with 124,000 new active customers quarter over quarter in the third quarter. And that's the first time we've exceeded 100,000 new active customers in a given quarter. Even more exciting is if you look underneath those numbers and you see the active customers, they're being more productive, right? So we're seeing an increased number of orders per active customer when you look at it on a last 12 months basis, because that's how the measure is defined. And we're seeing an increased number of net sales per active customer, that acceleration over the last couple of quarters. So really, really great trends in consumer engagement. And there's more that I could speak to as well. I think, you could say, hey, a lot of companies are doing well in retail right now. We've heard a lot about that, but how is Revolve doing over the long term? And I think this is what I think has impressed investors too, is that we've been consistently strong, both in growing the top line as well as bottom line profitability over many years. So what I'm showing you here is our financial performance that we've disclosed since the time of the IPO, and the IPO was in 2019, and we began reporting numbers as far back as 2016. And you can see on the left side, the net sales performance. We've consistently said we're going to grow. Our plan is to grow a long-term 20% or better. And we've done that very consistently through those pre-COVID periods, and some years on an annual basis, much better than 20%. Obviously, with COVID last year, people stopped going out. As a brand that's been known for allowing consumers to live their active lifestyle, we suffered, in dresses in particular, really, really suffered. And we did a great job holding the line and selling into categories that hadn't been strong for Revolve before. I'll talk more about that in a bit. And then if you shift to the middle of the slide here, the net income, very, very fantastically impressive in many respects, that we were able to deliver record net income in 2020, even with all the havoc that we were seeing in the industry, in particular with consumers sheltering at home. So we've seen 40x growth versus 2016, sort of the baseline of our net income when we first started reporting it. And then on an adjusted EBITDA basis, I think that some of the analysts would say what's most important is how much of that profitability is dropping as a percentage of net sales. And you can see our adjusted EBITDA margin is up 4x from 2016, from around 3% to 13% in just the last 12 months on an LTM basis. So you're really delivering the goods on both a net sales perspective, which has come back really strongly this year, as you can see, and also on a profitability perspective, even through the depths of the challenges that we faced last year with COVID. I think shifting to the cash flow and the balance sheet, I think there's a lot of e-commerce companies that are growing the top line rapidly. A lot less or much fewer that are growing profitability, and even much fewer that are delivering the goods on profitability and generating strong cash flow. And so I feel really good about our differentiation here. Revolve has delivered very strong cash flow. We actually, fun fact, waited 9 years before taking any outside capital since the company was founded in 2003. This is a business that was kind of intended to generate its own cash flow from day one, and we've done just that for many years here, as you can see. So we had record for cash flow during 2020, during the depths of COVID, as you can see here, and we have a very highly capital efficient model that has allowed us to generate significant free cash flow, and that's certainly strengthened the balance sheet. So just in the last 2 years, we've increased our cash position by more than 150 million, and most of that has come from simply, cash flow from operations, again, highly differentiated relative to some peers out there. I'll wrap up just with a discussion of key growth drivers. So hopefully, I've been able to show that we've performed very well, even through some difficult periods. But I think the most important question I would imagine on any investor's minds is, what does the growth opportunity look for? How can we continue that growth in the years to come? And I feel really good about the opportunities ahead of us, even better than I did 2 years ago when I joined the company pre-COVID. First and foremost, I think we have a great opportunity to increase our customer base, right? So I mentioned active customers, and active customers grew by the most that they have in the third quarter, more than ever. And that's really exciting. But even so, we still only have, 1.7 million active customers at the end of September. And so if you do the math based on how we define our target market, we're less than 3% penetrated in the United States alone, of the 58 million, women in our target market that we define as our target market. And when you compare that to other peers, you can see that, whether you're a Nordstrom at 35 million active customers or another online player like an ASOS with 26 million active customers, any way you slice it, we feel like we've got a great opportunity to continue to grow the active customer base. And so this is one of the reasons why we continue to invest aggressively in marketing. We feel like the opportunity is there for us, and the consumer engagement we're seeing right now really sets us up well to continue to grow the active customers. And this alone, this analysis of the penetration doesn't even speak to the international opportunity that I'm really excited about as well. I also feel really good about the long-term opportunity in the luxury segment at Forward. I mentioned that Forward has been the faster growing segment in recent quarters. It's really shown some excitement. And there's lots of different estimates on how big the luxury market is. And Oliver, you probably have a better sense of this than me, but any way you slice it, it is defined in the hundreds of billions of dollars. And you compare that to Forward on a LTM basis of $128 million, we've got a lot of room to grow, and we're growing very quickly, and I think extremely well positioned for this opportunity. And a lot of the research would suggest too that luxury was a late adopter to moving online with e-commerce, and COVID, I think, was a helpful catalyst to moving that market online. So it's a really exciting market opportunity. And if you shift to the middle of the page, we believe there are unique catalysts and drivers within Revolve and Forward that position us well. And one of the ones that's already started to bear, some fruit that positions us well is the introduction of a Forward loyalty program. And it may surprise you to know that we did not have a Forward loyalty program until the second quarter of this year. And so it was well received by our customers, but even more exciting is that it's integrated with the Revolve loyalty program. And what that means is that our customers, we have many, many, many more customers than Revolve who now have the ability to shop on Forward and get rewarded for that spend, earn points, and earn the same rewards that they would from spending on Revolve. And so it gives us a fantastic opportunity to introduce Forward, which we believe is really the best destination for luxury goods out there, to our Revolve customers, very loyal customers, to get them to think about spending on that handbag that we know she's buying somewhere. Why not with Forward? And if you look at the right-hand side of the page, you can see the results have been really compelling. So once again, looking at 2019, because of the strange comparison with 2020, you can see better than 100% growth on a 2-year basis for the 9 months in Forward. At the top of the page on the right, even more interesting is that our gross margin has increased 8 points at Forward in the last 2 years, really demonstrating how well our offerings are resonating with that next generation consumer. And so if I was listening to me talk, I would say, well, that's really great, really compelling, but how does that compare to others in the industry? And so I think the good news is it compares very favorably. And this is just me looking at what others have disclosed that I view as peers, right? And they're different companies, different business models, but they're all focused on luxury in some way, shape, or form. And once again, because 2020 was a strange comp, I'm looking at 1-year growth and 2-year growth. And what I see is that Forward is outgrowing others. We're not the largest, but we're outgrowing others. So really demonstrating a lot of momentum. And one of the things I didn't mention earlier that I think is only going to help our momentum going forward is that we brought on Kendall Jenner as the creative director for Forward in early September, and announced that on September 1st. That gives us a great way to expand our exposure, broaden our awareness across a much larger set of luxury consumers. You know, she's the epitome of luxury fashion. Really excited how that relationship is going, and we're just getting started with that relationship as well. I'm also really excited about our international opportunity, and it may surprise you, kind of a fun fact to know that we have no international operations, right? No distribution centers, no offices, nothing really. And we serve it all from our warehouses in the US and specifically in Southern California, where I'm based. And so that has created historically a challenge, like how do we provide that same great experience that we're known for in international markets? How do we do that? And so we've done some blocking and tackling and made some really nice progress in the last few years, going market by market to try to provide that same great experience. And one good sign of progress is that we can now ship to more than 80% of our international markets based on the revenue in 2 to 3 days from Southern California. So that's real progress. And we've made a lot more progress in terms of removing friction in international markets that's resulted in really outstanding results. Every time we remove that friction, we see the results improve in those markets. So it's really been exciting. I think there's a lot more we can do. And to kind of look at the results on the right-hand side, you know, year to date in 2019, 2 years ago, international was 16% of our net sales. Today, year to date through 2021, it's up 3 points to around 19% of net sales. There's no reason that can't go much, much higher with all the efforts we're putting in place to improve the service levels in those international markets. And you can see at the bottom of the page, the growth rate is also accelerated. So I'm very excited about the international markets. One of the things that's interesting is that while we don't have a physical operation in international markets, we have thousands and thousands of very excited ambassadors of the brand or influencers around the world that really helped us to get the word out. We've seen time and time again that the Revolve brand resonates very well with the international consumer. And one of the challenges that we have to overcome on market by market basis is making sure that we can allow for hassle-free returns as well. And where we've solved that problem, we've seen really great results. This is an interesting one. You know, historically, Revolve has been known as the place to sort of find that outfit for living your best life, whether it's going to concerts, going to festivals, you know, traveling, weddings, you know, prom, you name it. And so we've historically been over-indexed in dresses in a positive way. It's really been a great business for us. We haven't been that strong in some other categories like active or like beauty. And when COVID came on last year and people weren't buying dresses, I really give a lot of credit to our team on the marketing side and the merchandising side to find ways to engage with the consumer. And a really great way that we do that, as an example, is we created live streaming workouts on a daily basis and really helped to drive engagement, following, and sales within our active products. And so that's been really great. That's an area we're investing in. Probably the best example, and one of the metrics that we disclose, is our beauty net sales. And so you can see last year in 2020, beauty more than doubled, you know, and this is a category that we hadn't been that strong in, but it was a great opportunity. And so we knew we had loyal customers, and so we started marketing and merchandising our beauty offerings, and it's been fantastic. And what's really even exciting more than that is that beauty has continued to grow this year, even as the dresses have come back strongly. So dresses net sales almost doubled in the third quarter, and you can see beauty continues to grow nicely. And so it leads me to believe that we're coming out of COVID, if we are coming out of COVID, and hopefully we are soon, stronger than we were going into it, because we've established deeper connections with that customer. And if you look on the right-hand side of the page, there's a lot more areas where we can continue to serve her, whether it's through our third-party brands or our own brands. And these are just some examples of categories where we see opportunity. And then lastly, I'd be remiss if I didn't talk about our own brands. And so I talked about how we have a very differentiated merchandising assortment. And you know, the fact that you come to Revolve and you see brands that are not available on other sites in many cases, own brands is a really good example of that. And just to put a fine point on it, our own brands are, you know, what some might call private labels, but the consumers view them as very premium. They're not priced at a discount. It's not like you're going into Costco and you see a brand that's priced at less. These are really, truly premium brands. And I believe, based on our feedback, that consumers don't know that they're own brands. They just trust Revolve to show them something that's premium and on trend. And in fact, if you look at our performance last year, 6 of the top 10 brands on Revolve were our own brands. And we see a great opportunity to expand them in the future, whether it's adding new styles into existing brands or adding new categories altogether, which is one of the areas I'm most excited about. As background, historically, the own brands had been very focused in that going out wear, in those categories. And as we've reinvested in own brands, and we're doing just that, we brought on some great talent to help us expand our range of categories and price points. And we think it's going to be, better than ever. We're looking for own brands to grow in penetration in 2022 and beyond. And the importance of that is that own brands come at a higher gross profit margin. So it's something that we and investors, I think, are excited about. With that, I'd be happy to answer any questions you have, Oliver, drill into any parts of the presentation you'd like to go deeper on.
Yeah, thanks, Erik. Very, very helpful, giving us a great overview of your differentiation. So, Erik, quite simply, how does Revolve differentiate itself from other pure play e-commerce apparel sites?
Sure. I mean, I think it's, if you're talking about Revolve specifically and not Forward, I think it's really, really unique that, and I'm glad you asked the question, the styles on the site are largely emerging third-party brands, and there's so many of them that want to work through Revolve because they understand that really deep connection we have with that next generation consumer and our own brands. And so there's not a lot of overlap between what you might find at Revolve and other sites. And so that is very supportive of our full price selling. And so as background there, we once a year disclose what our net sales at full price are. It's been very high historically, in the high 70%. The last couple of times we've disclosed it on an annual basis, we'll be even higher in 2021. We've seen outstanding full price selling. And so the consumer is coming to us for inspiration. She's coming to us to show her brands that she may never have heard of. And we've earned that trust to be able to do that. Whereas that's very different from, I think, a lot of other sites where they're doing more price comparison. She's not looking for the best price from Revolve. She wants to look her best, and she wants to wear something that not everybody else is sort of wearing. And that's really exciting to me. So I think it's highly differentiated. I can't think of another comp that has that same relationship with the consumer with such a unique and differentiated merchandising assortment.
What about the Forward business? And the same question, what are the key points of difference? It's a very competitive online luxury space as well.
Sure. So with Forward, it's interesting. It's been a long time coming. This is a site that we introduced years and years and years ago. And, we've started to see the momentum even before COVID hit, and then obviously set back a little bit when sort of the market changed last year. But we feel like we've positioned it extremely well. What I think is differentiating about Forward is the curation. And so we don't have the broadest assortment, but it's, once again, she's coming to us for discovery. It's that sort of younger luxury consumer who is looking for what's new and what's on trend. And we do a great job with the imagery on the site. In fact, a lot of our brands, I understand, at Forward will ask us for the imagery that we take because they like it so well. So we do a great job. You're really capturing her attention with the curation. And now with Kendall Jenner on board, she's created her own edits and created a lot more awareness, a lot of excitement, and just doing a really, really great job there. And of course, being able to now tap into the marketing expertise that we've had at Revolve and starting to do more of that on the Forward side as well. So those are some of the advantages we have. But it's really that curated product assortment, I think, is so key. If I just had to pick one.
Yeah, and the product and the photos really look different.
And of course, now being able to market to that Revolve customer is really, really exciting in terms of the growth opportunity that others wouldn't have.
An incoming question. So there are many challenges: labor, wage pressure, supply chain delays. How would you rate these headwinds from largest to smallest? What should we know about how you've faced these supply chain challenges?
Sure. Definitely. I think that I'd start off by reiterating what we've said in the past, that clearly our financial results have been exceptionally strong. And so they, I think, demonstrate that we've navigated the challenges much better than most in the industry. It's not to say we haven't had challenges, we have. And the areas that we've talked about, and I'll just kind of remind folks, in this area, that we've seen incoming inventory delays more than we've had in the past. So that is a fact of life. We've been able to mitigate that by the fact that we work with over 1,000 suppliers. And so if we can't get inventory from one supplier, then there's opportunities to get it from others. So that helps a lot. The fact that we have a very data-driven approach to merchandising allows us to see trends and move quicker. That also helps us a lot. And so it's been a headwind, but just one of many headwinds. And so we've been able to manage through it, obviously deliver really strong results. The other thing we've talked about is, like others in the industry, we've seen an increase in the cost of freight inbound. In particular, we do a significant amount of air freight, and we always have, and particularly for our own brands. And so the cost of that air freight has increased significantly ever since COVID hit. So it's not a new thing. We've seen that cost increase since March of last year. It kind of decreased a bit and then increased again, as we got into this year. And so there's been some puts and takes. But what differentiates us is that we have a very premium price point, and so we have more room to absorb increased costs and freight than a lower price point company would. Secondly, we've always been air freighting, and so we've always been sort of used to spending a little bit more, and we have that very strong gross margin. So it gives us the ability to navigate through it more than I think other companies would. As it relates to wage pressure, I think that we operate in California, which is a high wage state already. So we've already been at the higher end. I think the companies that had more challenges there, not to say we don't have any, are those that are in the lower cost states that have had to increase wages more significantly. I think our team has done a fantastic job hiring, and in particular our fulfillment centers. We've had to scale to support our customer. We're all about providing a great experience, and we've done a fantastic job keeping up with the growth. As well as in the customer service area, we've done a great job keeping up with the growth. One thing I'll point out is that our customer service team has begun to expand hiring to not just locally, because it's really become a virtual position. So we're hiring where the labor is, and finding more opportunities there. But that's been a nice way to navigate that challenge. But overall, I feel like we've done a great job mitigating the wage pressure. Obviously, there is some out there, but done a great job with that one.
Thanks, Eric. A couple more questions for incoming. So what about your bricks and mortar strategy 2022 and beyond? And an alternative way to answer that is like the in-person events and what's happening there. And the second question is return rates. What are they like, especially in different categories?
Sure. Yeah, great question. Maybe I'll start with the return rate one first. It's interesting. So last year we saw dresses slow down significantly. And so return rates pre-COVID had been pretty close to 55% ish, in that range. And then they dropped all the way down to close to kind of 40%, and we don't disclose the return rate, but you can do the math based on the metrics we disclose. It'll get you really, really close. And so they're very sensitive to the product categories. And so using extremes, dresses have the highest return rate. So like if you're going to go to a wedding and you want to just look your best, Revolve's going to help you with that. You may buy 2 dresses, try them on, figure out which one is going to help you really look your best, and then return the other one. That's a great business for us. At our average order value, we can obviously be very profitable, so you can see serving that customer. But by comparison, a category like beauty has a very low return rate in the low single digits. And so we saw beauty take off and grow in triple digits last year. We saw return rates dip down significantly, especially because dresses weren't moving. Now we've seen the return rates come back. And so they're still below where they were at that pre-COVID peak, but they're moving back up into the low 50% zone. Potentially we'll see them, level off below where they were pre-COVID as we continue to expand our range of categories that we serve customers with. Time will tell. And ultimately, it's all really about providing that same great customer experience. Giving her flexibility is the really most important thing for us. And we obviously have the price point and the gross margins and to support, such a, healthy return rate. And then the other question that you asked was in-person events. So it really hurt us last year not being able to do in-person events. So we weren't able to invest as much in marketing as we would like. And we've just recently been able to get back to it. And you can see it's provided some outstanding signs of consumer engagement. So we're really excited to once again have in-person events, but it's going to be a combination, because when in-person events were on pause last year, we started doing more live streaming, and we think that allowed us to expand our playbook, our marketing playbook. The combination of two is going to be better than ever. So I think it's very likely we'll be back at the Coachella event next year, our Revolve Festival. All signs are that that's going to happen. And, obviously we have to be nimble in this environment. Anything could change, but that is a very exciting event. It's been one of our biggest events, really our biggest event for many years. And we didn't have the opportunity to do it in 2020. We didn't have the opportunity to do it, this year. And all signs are that it looks like we maybe have the opportunity to do that again next year. And so that'll be exciting. And we were really excited by the New York Fashion Week events that we did, in September that you attended, Oliver. And I think there's a good likelihood we may look at doing something like that again. It's just allowed us to bring our consumers in, our customers in, our influencers in, really the whole community in. And it creates a tremendous amount of impact on social media that I spoke about earlier. That's been a key part of, driving new customer engagement and also awareness for the brand. So when we ask our customers, how did you find out about Revolve? The number one answer is they found out about social media. And so it really shows us that our marketing programs are working. That investment is really paying dividends, and not being able to host in-person events last year was a challenge. The other way that customers find out about us, by the way, is word of mouth. And so the fact that in-person events were really limited last year hurt us on multiple fronts, because, people weren't getting together socially and seeing the outfits they were wearing. You don't see that over Zoom. And so the word of mouth referrals to Revolve were less when people weren't getting together socially.
Well, Eric, it was great to have the briefing. There's so much opportunity ahead, and it's really fascinating to see all this next generation innovation as it applies to marketing, product, digital, and global as well. So, Eric, thanks for joining us.
Thank you, Oliver.
So thanks. And up next is Haverty's. Everybody have a great Cyber Monday. I hope you're shopping for yourself and for others as well.